ore. So it's not strictly a commodity in itself, but what the implications, what's happening in China could be for the rest of the world. We know their slowdown is definitely impacting their demand for these commodities, whether it be iron ore, copper, nickel, coal, and etc. But their cutting of interest rates has the potential to at least prop up that sector of the market and facilitate them to continue the Chinese enter into raw. So they're spending a lot of money in a wide variety of spaces, and I'll quickly let you know what they are. So they've announced more renewables than the entirety of Europe. So that's investment into building more renewables than all of Europe has. So that's solar, wind, all the rest. They're constructing canals, dams, and reservoirs of water to feed and all the people that they have. 800 billion yuan. One of the most biggest projects is a 200-kilometer long tunnel moving water from the Yangtze River to reservoirs across the country, 400 billion yuan on data centers, and high-speed rail across the country as well. So they're announcing huge spending, continuing to cut interest rates. So though the demand side might be slowing down in China, this spending and, of course, lower rates could have the potential to fuel commodities such as iron ore, which I know Dan will talk about now.
And what is the outlook for iron ore, Dan?
Yeah, so I think we've actually seen some positivity this week off the back of what Louis is talking about. There's been a couple of things unfold in China this week that have really, I guess, supported the price action. I know it's been quite downward trending for the last couple of months based on a lot of this negative data being released, but some movements from China this week that have, I guess, sparked some sort of positivity. So first of all, we saw futures prices rise on Tuesday after, as Lou mentioned, China cut the benchmark lending rates and lowered mortgage reference by bigger than a margin. So again, that's for support for the property market. Again, a lot of infrastructure there. And something that I guess the market did quite respond quite positively to in the short term on Tuesday and Wednesday. And also we saw yesterday they rose as well as Chinese steel mills boosted production as well. So I guess some benefits out of China this week after a lot of negative data. And as we've talked about over the last sort of 4 to 6 weeks, with so much negative data unfolding, I guess any glimpse of positivity that comes out of China, we do see pretty short, sharp, I guess, positive price actions with regards to the price of iron ore. So futures contracts were up about 3% this week after quite a negative week last week. And again, they've also come out with, I guess, we did see the president come out and I guess pledge his support to the economy and growing it moving forward, including further funding for infrastructure projects, which also boosted sentiment as well. So a slightly positive week for iron ore amongst a lot of negativity over the last month or so.